Welcome to Man in America, a voice of reason in a world gone mad. I'm your host, Seth Holhouse. Last week, we saw a massive breakout in the prices of gold and silver. And it wasn't just last week, and last week was we reached this crescendo, but it had been building for the past couple of months, really since the beginning of this year. This week, however, we saw what a lot of people were calling a crash in gold and silver. And you could say that it was a pretty significant loss, where gold and silver had dropped 5, 6, 7%. Here, I'll go ahead and pull up the price chart for right now. Friday morning, as I'm recording this, gold is at 41.33, silver is at 48.94. Gold coming down from 4,400, silver coming down from $53, $54 an ounce. Now, when this happened, I saw a lot of people, a lot of Bitcoin people were saying, look, we told you. A lot of people were saying that gold and silver had reached their top and that they were just going to crash back down. Now, with silver specifically, that's what's happened a few times in the past. As silver broke that $50 mark, it went over, it hit it, and dropped right back down. And so a lot of people were saying, okay, history's repeating itself. However, there's a lot more to the story. And if you look at the mechanisms that I believe are behind this sudden increase in the price of gold and silver, I think that the situation is very different now. And that's what I'm going to go into with you today. And so I'm going to spend the first kind of chunk of the show just kind of explaining what's happened in this past week with gold and silver and why the story is actually even becoming even bigger. But in the second half is I've got an interview with Colin Plume, which is actually from earlier this week, but I wanted to wait and see what was happening and give you a kind of a bigger update. And so a lot of the discussion with Colin Plume is actually very relevant, and part of it is actually talking about what happens when silver becomes unobtainable, right? What happens when you can't even find it? Because we're seeing that. We're seeing a lot of bullion dealers and various sellers from the wholesale level to the retail level are actually running out. And so what does that do to the market? What happens when you're competing with Apple or LG, right, on pricing silver? And so we're going to be getting into that in the second half of the interview. But I first want to start and just take a look at what are some of the bigger things that happened, because some very significant things happened this week with precious metals. And you might ask yourself, well, okay, why are precious metals important? Well, because in my own opinion, precious metals and gold specifically are the underbelly of the entire financial market. And I think that in the past, maybe it wasn't as much the case, but as what we're seeing what's happening right now, especially with China and the BRICS nations, you can see that gold especially and silver are playing a massive, massive role in what a lot of experts are referring to as in a global monetary reset, as we're resetting from a fiat-based system, a system that is really built around the U.S. dollar, the Federal Reserve note, or the FERN, as Cliff High refers to it. That we're seeing a global system that's resetting from that to a system based on precious metals and gold and silver. And this is extremely significant. This is arguably the most important story that's happening right now in the world, because that reset changes everything about our way of life. Everything that we've seen with the economy and everything in America has been tied to the fact that we have this reserve currency dollar that they can, since Nixon's role in the early 70s, that they can now print unlimited. And gold and silver were always the canary in the coal mine. They were always the indicators that showed when the dollar was being overinflated and overprinted and it was losing its value. You would see that the price of gold and silver would climb up very quickly, which is what happened back in the 70s and 80s after Nixon pulled the dollar off the gold standard. The bankers then introduced the LBMA, the London Bullion Market Association, which in conjunction with the COMEX and all the different paper versions of silver and gold, became a critical tool in suppressing the price of gold and silver. So they could keep printing and printing and printing dollars, but it wouldn't be reflected in the price of gold and silver. And so I believe what we're seeing happening right now is not just that, silver went on a run and hit $50, it's going to fall back down again. No. I think it's so much bigger than that. I think we're literally seeing a global monetary reset. And so I'm going to kind of give you a few indicators of that, and then I'll get into the interview with Colin. But I first want to pull up this tweet from Josh Philip Fair, who's the owner of, I think Scottsdale Mint is what it is. Let me check real quick. I think it's Scottsdale Mint. Yeah, he's a founder and the CEO of Scottsdale Mint. Very, very smart guy when it comes to gold and silver and, palladium and, platinum, etc. So this is a really important chart because he says, where are we in this gold bull market? This graph tells an interesting story. I will add that today's financial situation dwarfs anything seen in the prior markets. You can imagine what this might mean. So this is a really important graph to look at. So what it is this is basically plotting the bull markets, right? The bull markets being the period of times when gold saw a rapid increase in its value. So he's plotting here 3 different bull markets, bull 1, bull 2, and bull 3. So bull 1 was from 1971 to 1980. So that was when, 1971 is when Nixon pulled the dollar off the gold standard. I told you that gold and silver, but gold was the canary in the coal mine. So the reason you saw, one of the main reasons, a massive spike in the value of gold in 1971 is because it was a reflection of the printing of the dollar. It's like as soon as the Feds could not wait to get that dollar pulled off of any kind of commodity, any kind of standardization that would force them to limit the amount of printing. So they just smashed on the printer, and that was what you saw. So what this chart shows, though, is that they've taken those bull markets and they've rebased them to the August 2018 price, basically showing that, okay, we're looking at the price that we're currently experiencing, how we're currently measuring the value of gold, going back to August in 2018 is where he started with this. And so because what it does, it shows you, while it feels like gold has gone through the roof, it's like, oh my gosh, it's gone from $1,800 to $4,400. He's comparing it to how what the bull market looked like in the 70s and also around 2018, and showing what that price of gold looked like, because it gives you a lot of context. So in the 70s, again, if you price the same increase in the gold value in today's gold value, so basically meaning if since 2018 gold followed the exact same bull market as the 70s, then gold would have already been at around $20,000 by now. And that's that teal line at the top there. Now, the rise of what we saw from 99 to 2011, actually that's the purple, sorry, the second one was 99. We saw from 99 to 2011, another bull market. If gold follows that same trend, then gold would be at around $9,000 right now. And whereas currently we're hovering around $4,000. So this is why a lot of people, they look at what's happening with gold and silver and they're saying, look, it's actually not that big of a deal. We've had much stronger bull markets before. So it's an important thing to look at because, again, you see a lot of these crypto people and stock market people saying, oh, gold has reached its top. It's overbought. It's like, I don't know. I feel like we're just getting started. But I want to kind of highlight, though, something that I think is a major factor in all this, though, which is looking at what I mentioned about the global monetary reset. Because if you look at the role of China specifically and what they're doing with the Shanghai Gold Exchange, the SGE, and how they're laying the foundation for a yuan, right, the Chinese currency that's not backed directly by gold, but basically exchangeable for gold in multiple locations across BRICS nations and different parts of Europe. This, I think, is the big story because this is a direct attack on the U.S. dollar. They're really working very quickly to pull the world off of the U.S. dollar and move them into a currency that is directly tied into gold and silver, which I think was a fatal flaw in the U.S. dollar. As soon as they pulled the U.S. dollar and it became a true fiat currency, you could go ahead and put a little kind of calendar on the wall and say, okay, how long before that currency fails? Fiat currencies have a life cycle. They never just go on forever. Gold and silver, they've always had value since the beginning of time, basically. I mean, 5,000 years since we had real civilization that was trading. They've had value. They'll never go without value. We'll never get to a point in the future where gold and silver just have zero value, right? But as fiat currencies, they have life cycles. There's been countless examples of this. They come and they go. They rise and they fall. They're born and they die. But I want to look at what's happened, though, with China, because this is key. So here's a tweet from the Gabesi letter. So breaking, Shanghai gold warrants have now risen to a record 86,000 kilograms this week. A gold warrant on the Shanghai Futures Exchange is a digital certificate that proves ownership of physical gold stored in an exchange-approved warehouse. So we saw that the Shanghai Gold Exchange, they're opening up these vaults around the world and allowing people to directly trade the yuan to gold. But they're basically kind of opening up a global network of vaults that are tied into their exchange. So what they're showing, though, is that they have these digital certificates. It's not CBDC type stuff. Basically, it's a certificate, this warrant, that is basically proves that they have ownership of a allocated metal in those vaults. It's not paper gold, it's real gold. So what this is showing is that the gold warrants have now risen to 86,000 kilograms this week. This marks a 28-fold increase since 2024, signaling an unprecedented surge in gold purchases by Chinese investors. So far this year, Shanghai gold warrants have surged 570%. China's gold purchases are unprecedented. So look at this chart here. This is the Shanghai data and showing the Shanghai gold warrants. Massive, massive. Now, I want to bring in another tweet that's kind of giving a broader picture of what's going on and how the movement of gold and silver in Asia and in the BRICS nations and in China relates to what's happening with the dollar. So this is a post by Shinaka. I'll just say his first name. It's breaking. The dollar system has entered cardiac arrest. So this is interesting because while a lot of people, again, over here in the West, you look at, earlier this week, people are panicking, gold's crashing. It's like, oh, you idiots, you overbought. All those people, all those gold bugs are wrong again. While everyone here was panicking, Asia was doing the opposite. They were buying like mad. They went on a buying spree because they know what's really happening. So he says, while Western speculators panicked, China executed the largest physical gold grab in financial history. The numbers that broke the world. Shanghai gold warrants, 86,000 kilograms this week. I showed you that chart. 28-fold increase since 2024, 570% increase year to date. Equivalent to 7% of annual global gold production was bought up in a week. Withdrawn in weeks while paper markets collapsed. The paradox that defies physics. On October 22nd, 2025, the exact moment the physical gold demand exploded and paper gold crashed 5.7%, silver plunged 9%, which is a 4.5 sigma event. Statistically impossible, yet it happened. What they're not telling you on CNBC. You go to CNBC, they're saying, oh, well, gold is overbought and, there's a lot of excitement around gold and it pushed the price up, but actually it's coming back down now. They're not telling you this. He's saying it wasn't a market correction. It was a system failure. China is paying a $6.2 billion insurance premium to hedge against a $30+ trillion based system. This is civilizational risk management at scale, the ultimate truth. Two different gold markets now exist. The Western paper market traded by algorithms and crushed by leverage, which is what we saw. When you saw the prices drop, you could see there's a lot of back-end stuff happening. The same things that the big banks and the bullion banks have been using to manipulate prices, that they're trying their best to kind of drop the price, exit their short positions. There's all kinds of funny stuff going on. But that's not what's happening in the East, though. In the East, they see it for what it really is. So again, two different gold markets now exist. Western paper gold traded by algorithms, crushed by leverage. Eastern physical gold held as sovereign survival insurance, price insensitive. The October crash was the violent decoupling of these two asset classes that were previously trading under one price. The bottom line that will define this delivery: price is no longer truth, delivery is truth. Let me ask you something. How much time do you spend every day clicking around online? Searching, scrolling, juggling a dozen tabs. It eats up a lot of time. Well, there's a new AI-powered web browser from Perplexity called Comet, and it's completely changing how you use the internet. Comet doesn't just give you answers, it actually does things for you. It clicks, types, scrolls, and gets stuff done in real time, like booking flights, finding hotels, ordering food, even summarizing long articles or videos. Now, I'll be honest, I'm hesitant about AI overall, but I started using Comet as a way to get around censorship. For example, when I search on Google, does the government have weather modification projects? All I get are fact checkers, official statements, and the same tired conspiracy theory label. But when I ask Comet the same question, it actually pulls up the real documents, declassified government files, congressional reports, even weather control patents. Hard facts, not filtered spin. So if you could use a good tool that gives you extra help with online tasks while also arming you with information to prove to your friends that you're not as crazy as they think you are, this could be a great solution. So you can try Perplexity's new AI browser Comet by heading to pplx.ai/MIA. And when you download it, you're also going to get a free month of Rumble Premium. So that link is in the description below. Again, it's pplx.ai/MIA. So take back your time and take back the truth online. The global financial system has already bifurcated. The East is building the next monetary system while the West is still reading the old operating manual. This is the financial equivalent of the cosmic microwave background radiation, the visible remnant of a fundamental restructuring that already occurred. The paradigm has shifted. The question is no longer, what's the price of gold? But can you actually take delivery? Watch what happens when the West answers no and the East answers yes. The next global reserve currency won't be printed, it'll be delivered. And again, there's that same chart of the Shanghai gold warrants. And here's just a video of this showing. He says, this guy's Wall Street Gold saying, while most North American investors were panicking over the dip this week, Chinese buyers were quietly loading up on silver. Different mentality, different incomes. This is just a video. I'll turn the volume off because it's irrelevant. Of just one of the videos of showing the amount of buying that was happening over in Asia. And I'm seeing these videos all over the place, especially over in China, over in Asia. People taking massive, massive deliveries of precious metals. Again, this is the difference between what's happened to us in the West as we've been psyoped and manipulated to believe that, hey, keep everything in the stock market, the 401k, and look at the Magnificent Seven. And it's all a con game. It's a Ponzi scheme built on a fiat currency. And most Americans, unfortunately, are still completely sucked into this Ponzi scheme. It's like Bernie Madoff's investors thinking they're making all this money and they're doing so great until the day that they're not. But it's not just China. It's not just China. It's India. This is crazy. So in 2024, India, which also is a very, very important nation, very key nation, very close to China, in the BRICS system. India imported 30% of global silver mining production in 2024, 246 million troy ounces. These are some crazy numbers. Look at this. According to data from Reuters and the Silver Institute, India imported about 7,669 metric tons of silver in 2024, or roughly 246 million ounces. Global silver mine production was around 820 million ounces that year. So India's imports were about 30% of global output. So in 2024, India imported around 30% of all silver that was mined around the world. Now, here's why that's key. So they just announced that India is now going to allow, I think starting in 2026, they're going to allow silver as a bank collateral. This is the re-monetization of silver. So the crime of 1873, when they demonetized silver here in America, silver used to be real money, used to be recognized as real money in America until 1873. That was the first step. And then you had the Federal Reserve coming in, and then you had the about 100 years later, you had the dollar finally exiting the gold standard. The reverse is happening over in Asia. So here we have India is now going to allow silver as bank collateral, meaning, let's just, this little 10-ounce bar. If you have, say, 200 ounces of silver, you could go to your local bank in India once this is in place. You could give them this silver as collateral and actually take a loan based upon this silver as collateral, which is recognizing this as money. This is very key. But what's also crazy here is that they're recognizing it as collateral with a 10-to-1 gold to silver ratio. It says India formally recognizes silver as bank collateral with a 10-to-1 gold to silver ratio, reshaping lending, boosting demand, and igniting a new era for silver as a global monetary metal. This is absolutely significant. One of the most important nations on earth in terms of population and also economy, India, has just basically they're re-monetizing silver, but also at a 10-to-1 ratio, which is crazy. Now here's a post from VBL's Ghost that helps frame this a little better. The remonetization of silver is at hand. There's only one other commodity on this earth that has the qualities of gold necessary to be money, that is indestructible, divisible, fungible, and plenty for without being falsifiable. The kicker? Silver is more than money. It's industrially key. It's actually a critical mineral that has been used beyond the monetary. It is the Goldilocks of metals, permanent, unprovable, in its raw form and simultaneously critical for industrial use. It'll take years for this to happen, and silver will never be carried in pockets again, but it is the only stable, reliable, quantifiable collateral that has dual purpose. Gold doesn't have dual purpose. You can't say jewelry is a dual purpose for gold. It doesn't have an industrial use, not like silver does. He says governments will mandate it top down as they encourage citizens to use it bottom up. It starts with collateral. There's a shortage of gold collateral on this earth. Silver is what comes next for the BRICS. So this is really, and again, this is also the article highlighting, a different article highlighting how they've are kind of updating the silver being used as collateral with the 10-to-1 ratio. Actually, it'll be effective April 1st, 2026. So this is really, really, really important. What he's saying here is that gold, which currently can be used much more as a tier 1 asset, as collateral, that silver is now entering that stage of being a collateralized asset. It's very, very, very significant. So before I get into the interview with Colin, I have one more, about a 6-minute video to show you. Let me pull it up real quick, with a guy named Edward von Greyers, who is a precious metals expert, to say the least. Okay? It's about a 6-minute video. And what he does in this video is he, in a very succinct way, outlines a lot of the same narratives that I've been talking about. He's talking about the destruction of the Western fiat system and the rise of the gold and silver-backed Eastern system and the global monetary reset that I believe that we're experiencing right now. So I'll play this video. I'll full screen it for you. It's about 6 minutes long. Just pay attention to this. This guy has a lot of wisdom to what he's saying here, and he's able to paint this picture very, very succinctly. So check this out.
Silver has always been called poor man's gold because basically it's today 1/80th of the price of gold. That means that the gold price is 80 times the silver price. I don't think silver will be called poor man's gold for very long because silver is now in the position where it's likely to catapult to much, much higher levels. It's being held at the $50 level. If we look at this graph, it was $50 in 1980 when gold was $850. It was $50 in 2011 when gold was $1,920. And it's just under $50 today when gold is over $4,000. So clearly, silver has been suppressed for the simple reason that there isn't enough stock of silver around. There is a shortage of silver every year, and that shortage is covered by short-term borrowing of silver, which means that it's silver that has been rehypothecated once or several times and not really existing silver stocks, which are free and clear. So we're going to see now, I think, and there probably is, could be in the next few days, silver not being held below this line. And it is the $50 line is not a resistance line, it's a catapult line. And I think once we go across that line properly, we have already been past it by a couple of dollars. Once we go across it properly, silver is going to shoot up to $60, $70, $80 in a very short period of time. And the long-term move of silver will mean that I have said already 25 years ago that gold is likely to reach 10,000 in today's terms. And if silver reaches the historical relationship to gold, that would mean $666 silver. That's not a forecast, but that's an unlikely level that silver will go to. By that time, it's not going to be poor man's gold anymore. It's going to be the rich man's silver. These shortages are there on a daily basis. We buy silver for our clients every day, and there's more buying than ever, and it's extremely difficult to get hold of physical silver. Remember, of course, physical is the only way that you should hold the metals. Physical silver, physical gold outside the banking system in your own name, because that's the way to preserve wealth in a proper way. Now, what does that mean with silver tens of dollars higher in a very short period of time and hundreds of dollars higher within the next few years? Because gold will not move as fast, but gold will move up also. It clearly means that the fiat currencies are on their final leg down to zero. They're 99% down since 1971, and they're now going to move down all the way to zero. That means that the Western financial system is now on the verge of crashing. We have problems in the banking system already, especially in the US. We have problems in Europe. We have geopolitical problems of a magnitude that the world hasn't seen before. Trump is trying to maintain the US hegemony by threatening China, by threatening India, but they're not responding. China says it doesn't give a damn about the tariffs that Trump is imposing on higher and higher levels. And as a matter of fact, anyway, China's export to the US is now only 10%. So the US is not that important market anymore. So China is not going to give in to the pressures or the blackmail of Trump, nor is India. Trump has also threatened India with sanctions because they buy Russian oil. But India is not giving in to these pressures. As a matter of fact, Modi refused to take a call from Trump recently, thus totally ignoring him. At the same time, he went discussions with Xi in China and with Putin. So the power is totally shifting from west to east, as we have been talking about in the last few years. And that is now accelerating, and that will accelerate further with the collapse of the fiat currencies in the West especially. And the power, not just political power, but the power of money will move also to the east. And of course, Eastern countries are buying more gold than ever. China, India, Russia, and many other Eastern countries are accumulating gold to an extent that we've never seen before. And their official reserves are likely to be much higher than they are actually advertising. And their official reserves are much higher than they are declaring. So we're getting to the end of a monetary era, an era which started in 1913 with the creation of the Fed, and the decline accelerated in 1971 when Nixon closed the gold window. And now we are at the final leg down, which is going to be an absolute disaster for the West and for financial assets and for investment assets. As I've declared already previously, I am very certain that stock markets will lose at least 90% of their value in real terms, which is measured against gold. So holders of stocks, holders of bonds, holders of financial assets are going to have destruction of their wealth that has never been seen before in history. This is why it's absolutely essential from paper assets, from stock markets, from bond markets, even from property markets, into physical gold and silver. That's what's going to save you when the collapse starts in earnest with falls that nobody expects. So get prepared, buy physical assets, gold and silver, and cut down on your other assets like stocks and bonds. It's still time to preserve your wealth and to save you from seeing total decline in your wealth by having paper assets going down by, as I said, at least 90% against real money. And real money is going to be gold and silver and other real assets. So take the steps that you need to do. Buy gold, buy silver, reduce your other financial assets, and you will sleep much better.
So there's one thing I want to highlight there that he said, just kind of mentioned, is that he talked about how he's made predictions of the stock market losing 90% of its value. And that's wild to think about. But like I covered previously this week, if you look at how, or actually it was late last week, sorry, that the stock market is measured in the dollar. And if you look at the overprinting and the massive increase in the monetary supply, the stock market is a direct reflection of that. So if the stock market, say Dow's at, say, $45,000, what is that measurement? It should be measured against gold, not against dollars, because dollars they've been overinflated and overprinted. It's no longer an accurate ruler. It's no longer an equal measuring stick to say that, oh, look how many dollars it's worth. It's like, well, what does that even mean? Because they've printed trillions and trillions and trillions of dollars. And so a lot of those dollars have gone into the stock market. They've propped it up. They give the illusion of this booming economy and booming stock market. But when it corrects, what happens? Because the dollar, as I think, well, I'm not sure if it was him who said that or someone else I was reading it, the dollar's lost 99% of its value since 71. That's what's happened. If you look at how much a house used to cost, right back in the 50s, you could buy, I don't know exactly, but you could buy a beautiful family home for, say, $6,000. That same home now is $600,000, right? So it's worth the dollar's worth 1% of it was at that time. And so the stock market, when this correction happens, the assets that are sitting in the dollar, your bank account, 401k, stock holdings, etc., those assets follow with the dollar as everything gets repriced. We saw, again, I showed recently a video that what happened in the Weimar Republic. The same thing, that you saw the price of gold in the Weimar currency skyrocket, but the currency was useless. So anyway, he had some wise words there. So I'll let me pull up a different site here. So in a few seconds here, we'll start the interview with Colin Plume. I want to say, though, if you are looking to buy gold and silver, first off, I'll say, look, if you have something you trust that you're working with, great. I'm not here trying to make you change. If you don't, there's a lot of people that are trying to scam you. You'd be very, very cautious. Anybody charging over, say, 10% premiums for any kind of gold and silver, be very wary of that. It's normal, though, to be charged a 3, 5, 7% premium, especially in today's market. Just be aware of that. If you're looking for something you can trust, that's not going to take advantage of you, that's going to be fair, but also that specializes in IRA transfers and 401k transfers, Noble Gold is who I work with. It's who I recommend. Go to goldwithseth.com or call 877-646-5347. Those links are going to be in the description below. So anyway, let's go ahead and just dive into this interview with Colin Plume, which is going to be also very interesting because we're looking at what happens if silver runs out. What happens if you can't get it? What happens? How does the pricing of silver work if you're now competing with giant corporations like Tesla or Apple? What if they are trying to also stock up to build their cars or their phones or their solar panels or whatever it is? How does that change everything? So we're going to be just taking a dive into that with Colin Plume. So please enjoy this interview. Colin, man, it's great to have you on the show, especially right now. There is so much happening with precious metals. So I'm really looking forward to talking with you today. So thank you for being here.
Yeah, thanks. Yeah, it's been good. We've been busy. Actually, it's funny. We did I didn't even mention this before. We did a man on the street with one of my top guys. And before we got on, I was thinking I mentioned this to you, but so that we went out, we started talking to people about gold and silver. And the first hour we were in like a really public hot mall area, and we couldn't give away. We're like, do you want free silver? And like people were they were shunning us. It was like it took us like 45 minutes to give an ounce. Finally, they were like, oh, well, maybe. All right. They were like, but you got to come over and talk to us and tell us you got to give us 5 minutes of your time for an ounce of silver. It took us 45 minutes to give away a free ounce of silver. I mean, it's shocking how little we know in the US. And these are people going in the mall, spending money, coming with bags. They had no idea. And we asked them if they knew the spot price of gold. One guy said like 2,000. I mean, the people have no idea what's going on. So I'm glad we're here kind of getting into this and talking about it.
It's interesting that you said that, because that's something I've thought a lot about. And I think I saw something similar to that maybe, I don't know, 6 months ago or so. And I think that they were on like a college campus and they had, I think, $100 bill and like, I think a 1 ounce gold coin. And they were saying, would you take the $100 bill or the gold coin? And almost everyone just took the $100 bill. It's just that like, they just don't get it. Like, and I think it's intentional. I think it's actually part of a very, very very systematic, long-term psychological operation to get us to, move from having, silver, first obviously silver was monetary, right? Until I think it was 1873 that they canceled that. They pulled gold off in the 100 years later, and now they've replaced it with paper, right? And everyone's more concerned about their Nvidia stock than real precious metals. And I think it's part of a much bigger campaign. But what's interesting though is if you look at what's happening in America versus other countries. And actually, I'll find some next time you're talking, and I can kind of pull my eyes away. I'll go and find, because I have a bunch of saved images of just people in different countries. Let me see if I can find some real quick of lines out the door, like Australia. Like here we go. Here's one of my bookmarks I had saved. This is Vietnam. Waiting for the gold markets to open over in Vietnam. You're seeing the same thing happening in India, even Australia, which is interesting because Australia is still. Actually, right here, yeah. This is in Singapore. This is Bullion Star before opening hours in Singapore a couple of days ago. So you see that in other countries, they understand the role of gold and silver. But actually, I do have a video I'm going to play quickly because I saved it for our discussion. So this is a video recently Bill Maher had on Mark Cuban and someone else. I'm not sure the other guy's name, and they're talking about gold, but it's funny because they're making fun of people who are buying gold. It's actually interesting because it's like, this is the psychological campaign right here. If you when you see it on late night television, this is like probably one of the strongest influencers of what's going to drive people's sentiment is like what they see the late night show talking about. So this is a minute 20. I'll play this really quickly. It's kind of funny. Yeah.
Gold prices hit records high this week. Oh, they did?
Yes, they did.
Oh, and that didn't sound good.
That's not a good sign. Usually gold goes up.
It's good if you're decorating the White House.
Gold goes up when you're worried about the value of the dollar going down. That's the equation.
What has the dollar done?
But people go to gold when they are scared, right?
Yes. Mm-hmm.
It's so crazy. Gold. I mean, it's so antiquated.
I mean, what are you going to do with gold, right? Walk around with a bar and hit somebody over the head? No. And then we say, no.
And also, like, I mean, I think I have some gold in my portfolio. I don't actually have it in my, right? It just says, it's still something just right on.
Right, it's still digital, right? Yeah.
Right. It's still like I own gold.
Okay,
like
but are you a Bitcoiner? Because people say that's digital gold.
I understand.
I'm in the Warren Buffett camp of you'd be much happier owning, a little piece of land that you could farm because it actually produces something. Whereas if you own gold...
I have a little piece of land, and I'll tell you what I produce. I'm going to have some right after the show. Yeah.
But you can see it, though, right? I mean, obviously, he's taking into a joke about his, pot farm, I'm guessing. But it's almost like if you're someone that is owning gold or think about buying gold, they make you feel stupid for it. It's like, oh, it's so antiquated. What are you going to do, hit someone over the head with it? It's like...
Right. Well, and like, it's funny, the guy in the suit, who we don't know who he is, but he's like, you should own like, what is that guy going to do with farmland? What is, I mean, can you guys tilling the farmland? I can't, like, you actually have to, like, listen, you could buy just farmland, but if you don't know anything about it, you could lose your shirt too. Like, that's the thing about gold is, like, all you need to know is that central banks, like, they didn't even get into it. It's like, if it's so antiquated, why are central banks buying it? Like, that's the thing I don't understand. Like, why are institutions buying it? Why are institutions saying, I don't want it stored and I want to take possession of it? If it's so antiquated, I just think it's, you have these people that are, I mean, Mark Cuban's a billionaire and he made his money in different, he started a company and sold it and had a big exit. But I think behind the scenes, you're seeing a lot of these types of people actually really are buying gold. We've had a lot of family offices buy gold from us, and they continue to. I mean, and in a family office is what Mark Cuban has, and what probably Bill Maher has. They are in charge of diversifying your portfolio, paying your bills, doing all those things. But they've contacted us and say, yeah, we already have some real estate. We already have some stocks. We do want to get some exposure to gold, and we don't want to do it the way, because ultimately they're worried about the ultimate risk, which is there's not enough gold in the ETFs. There's not enough. And so these are legacy families that are buying physical gold. So it is interesting to see that. But I can tell you this: I've had people from all walks of life, from hedge fund people that are highly immersed in the stock market, to family offices, to people that have massive trust. They're all buying physical gold. So you can laugh at it, but I think the returns really do speak for themselves over the last few years. And I think ultimately you can decide to just have the ETF version, or you can have the real thing. And I think most people want the real thing. I think they prefer having that control. And until your portfolio gets robbed, which how many celebrities have you seen, or how many high-end people have you seen where they're like, oh, I didn't pay attention and they stole my money? Well, getting in physical gold, putting it in a vault, unless they can break into your vault, that's a surefire way they're not going to steal your money, right? Like, you can put it in a safe, secure place. And we see it all the time. I mean, people call us every day that just they have an IRA in gold and silver already, and then they go, I want to have a little at home. And so it's an extra level of security and safety for them. And, those videos of people in other parts of the country lining up at those stores to buy bullion coins and buy bullion bars is the exact opposite of what I saw on the streets recently, where they were literally like at the mall buying expensive handbags or buying clothes. Like, these people are lining up to buy things that will help protect their family. And so, you could be cynical of it or say what you want, but in the end, I think those people are they're going to win out, because they're thinking about protecting their family, that's really what you have to do. And they're right. Part of the reason gold's going up is the dollar is going down. So why wouldn't you want to have physical gold and silver? It makes the most sense.
And that's also what's interesting, because if you saw that the guy in the suit, again, I'm not sure who he was, but he knows what's happening, right? He goes, oh yeah, gold price goes up when the dollar's going down. And
sure,
that's what we've seen. And you saw, it was funny because Mark Cuban echoed him, right? Mark Cuban, he's like, yep, yeah, it's going down. But then Bill Maher instantly took it and he kind of turned it into some sort of kind of comedy routine and started making fun of it. But that's the real thing that's going on. And this is, I've done multiple shows on precious metals in the past week and a half or so. And obviously I like precious metals and I've always been a fan of them. And I own gold and silver, but it's so much bigger than that, because if you look at what's happening globally, you look at the LBMA, you look at the paper silver, the paper gold markets are starting to crack. But then if you also look at the whole de-dollarization campaign, and what I covered in my show a couple of days ago was how China, how they have the Shanghai Gold Exchange, and how they're basically setting up SGE vaults in all these different key BRICS countries, and even I think in was it Zurich, or one of the main kind of European countries and centers, as a way for not to directly back the yuan with gold, but to make it a direct trade. So basically, it's a way that they're, say, allowing Saudi Arabia or other countries that to basically transact in the yuan, but knowing that they can actually exchange it for gold, like instantly in that region that they're at. I mean, that's a significant blow to the dollar. And you mentioned the central banks buying all this gold, and if my memory serves me correctly, I think that we just surpassed a level, the first time in a very long time, where the central banks are holding more gold than U.S. Treasuries. And so right, if you look at the writing on the wall, like if right, what's really helped me maintain the strength of the U.S. dollar is the fact that it was a global reserve currency and it was being held and the treasuries were sitting in all these sovereign banks and central banks. But if that reverses, which looks like what is happening here, what's going to prop the dollar up? And obviously we have the U.S. economy and there's things like that are key and part of this. But like they're kind of mocking something, but actually it's, in my opinion, this is like, I really think that we're entering into a global monetary reset where we're going right, from the dollar being the global reserve currency, the dominant financial force globally, into a system that seems to be much more backed by gold, not kind of directly, but indirectly as an equal exchange, which I mean, for the life that we've lived in America, it's like America is what it is booming nation because we've been able to print unlimited money that we've forced other countries to hold, or else they're not going to have our military protection or whatever the different deals that were made are. But a quick question. Do you ever deal with bloating, low energy, or just feeling off in your gut? Well, you're not alone. Your gut health is like the master control switch for your whole body. Digestion, immunity, even your mood all depend on it. Here's the kicker. Most of us have way more bad bacteria than good bacteria, thanks to processed food, stress, even tap water. That imbalance can wreck your digestion, drain your energy, cause skin flare-ups, and mess with focus. It's kind of like trying to run a city when most of the workers are on strike. That's where Vive Biotics from Perfect Origins comes in. It's a liquid probiotic blend with 15 powerful strains plus prebiotics, all fermented so they actually survive your stomach acid and get to your intestines where the real healing happens. Also, we're giving away free bottles of Vive Biotics. Just click on the link in the show description to enter. And if you don't want to wait, just use code MIA for 25% off at checkout. With a 180-day money-back guarantee, you've got nothing to lose, except maybe the bloating. So make sure you click on that link in the description below. If that changes, like our way of life in America, I think we're seeing it, but it'll change very quickly overnight. And it's not in a good way.
We should be encouraging people to buy physical the way they are in other countries. I think that's the thing that we're missing. The fact that, you'd mentioned like college campuses are quite confused and they'd rather take $100 over a 1 ounce gold coin, which is worth $4,200 today. Like that, the fact that they like the immediate, I'll take this 100, and some of them may even know what the price of gold, but I got to go take it to a shop or I got to resell. It's like, what do you mean? Like, that's how lazy, those kids have become and so disenfranchised with like the growth mindset that a college student is supposed to have. And I think this is like, part of the thing that, with Charlie Kirk, that he was like going there and trying to reshape minds and open up minds. And I think that that's the concerning part is you have the college campuses that are not educating people on money. People are going there and getting in massive amounts of debt. So maybe they don't want them thinking about money because if they thought about how in debt they're going to be when they leave, they probably walk out of that college institution. And then you have billionaires like, Mark Cuban and these guys, saying like, just don't do it. And it's very telling because you have billionaires on the other side. You have, Ray Dalio and, a lot of these Jared Salenti and all these like really smart people that are more conservative that have like for years been saying like, we got a problem. You got to own gold. You got to own more. And they've been telling people. So it's like interesting what people that are on the left are like putting out there in the world. And people are going to look to Mark Cuban and go, gold, mate. Mark Cuban says it's not worth it. I'm not going to do it. I mean, they respect these people and they're leading them astray. And it's like, how many people are going to be able to do what Mark Cuban did, right? Like one of one, like the 0.00001% are going to be that person. We have to give people information that lead them to a happy and successful life. And I think like them just saying like, oh, this is stupid and I have it digitally and I don't really understand it and I should have farmland. Most people can't do that either. They can't do farmland. Nobody. I mean, if you have a full-time job, both of you, who's going to like, how are you going to have time to buy a plot of land? I mean, so I think this is it's a messaging issue that we're seeing out there that's happening on the left where they want you to just be connected to the government. They want you to just, not have this kind of education. And that's the scary thing that I see happening.
Exactly. And so, but one thing I want to ask you, because you are on the retail side of this, something that I am seeing, and it's a very reasonable question of just saying, what happens when the silver runs out? Because,
sure.
one of my shows the past week, I went into a very detailed chart showing silver production, which is slowing down, right? Because the mines are just being tapped out and it's getting more difficult to find the new places to dig and everything. But you've also got, like, conversely, you have the industrial uses of silver going up even more. Solar, AI data centers, robotics, batteries, all those things require silver, not even stepping into the military industrial complex and weapons. I mean, the amount of silver that goes into missiles is mind blowing. And so if you look at that happening, on top of the fact of what happens if just a fraction of the paper market wants to then move to silver. Because last I checked, if you look at the silver physical versus paper, it's about 1 to 360. So that for every one single solid ounce of silver, you've got 360 kind of promissory or paper notes, right? Or, SLV, kind of certificates. And so, because we're seeing, here's a post right here. This is from last night. So SD Bullion and APMEX are arguably two of the largest online dealers. Actually, in JM, so SD Bullion and APMEX are now sold out of kilo bars, and JM Bullion only had 17 left. So everything else is pre-order. So these are the three largest online dealers. And this is an important question of what happens when silver runs out. And not to say that, there's no more, obviously there's a lot of silver moving around, but what happens when whatever is available gets pulled into the bullion banks, the large, manufacturing companies, Tesla, Apple, et cetera. Because I think that, you've heard people talk about in the past how silver will become unobtainium, right? It's like, well, how much is silver going to be worth in the future? Well, it'll be unobtainium, right? So what are your thoughts on that?
Yeah, I mean, so we had the same thing happen right in the beginning of COVID. And so what we did at Noble is we bought, before we just ran out, we bought every silver kilo and every 1,000-ounce bar in the whole market. And actually, I think I've mentioned this, I was competing with COMEX. We bought everything. We bought everything possibly attainable. I took money out of my house. It was like a massive purchase, like the biggest purchase, because I knew that there wasn't going to be any left. And it was right. There wasn't, but we actually never stopped taking orders. We will still continue to take orders on silver. We have we've built this infrastructure where we get silver from mints. We get it from shops. We get it from a lot of different places. So we've never run out. We won't run out ever. And so, yeah, I think, those shops, what they're going to do is, run out and then really, and they work, a lot of these companies work together. They go, oh, how are you doing inventory? Okay, well, we can go up another 10%, right? Because we're all running low, right? I mean, you get opportunity. I'm not saying these two companies directly, but companies do this out there. So, the thing you want to be able to do, and we do this, is you have to be able to pivot if necessary to other products. And that's what we did. So we would go to 100-ounce silver bars, or to kilos, or to, our 1,000-ounce bars, or different rounds. So we've always been able to pivot into another product. So in the whole time we've been in business, we've never had a moment where we didn't have any and weren't able to sell it. There was times that it would take maybe a month delivery, as opposed to right now we're delivering in a week and a half, but we were able to lock in the price. So yeah, I think that there will continue to have these things happen. There will be shortages because, like you said, and I think the numbers are 174 million shortage of silver ounces per year right now. If the industrial demand continues to skyrocket, they will outpay the retail mining buyer. So the mint, they will outpay. They will, because they have to have it. The U.S. government has to have it. They will outpay. So you will see the retail amount of limited these continue to shrink, because the market of industrial will continue to buy and pay more as needed. The U.S. governments, they need it for drones, they will pay it. So yeah, I think we'll run into a situation where there'll be a lot of companies that run out. We will not. Yeah, I think that's one of the things we've done, because we sold so much back then. We have a lot of people that, retired, those, I think you're seeing, kilos at $1,750, $1,800. I sold those to people at, $500 4 years ago. So there's a lot of people that are retiring and they're selling those back to us, and we can move them into new people. So yeah, the companies will run out, but we will never run out of gold, silver, platinum, or palladium. There's just no way. We built this structure in a way so we don't run out, and so that when silver hits 100 or 150, the market will shrink. I think companies will go out of business, and then the bigger companies like us will just kind of swallow them up, and we'll take whatever's remaining inventory. Also, there's still opportunities with, there's always junk silver available. There's always other silver products, and they're not the ideal, in my opinion. I prefer, these, the bars, but if, push comes to shove, you can always transition into those other. So it's part of the market dynamics, but we found a system that will continue to ship forever.
It makes sense. And I've mostly bought 1 ounce, 1 ounce, generic rounds or bars, or, so occasionally I'll find an opportunity to get some Eagles at a good price. But, or, kilos, 10-ounce bars, kilo bars. And I've got a decent amount of, a couple different bags of junk silver, but I'm looking at that as more, if there's a societal collapse, I need something to like buy my groceries with. If I have a, pocket full of silver dimes, that's kind of the ultimate kind of barter currency, is that junk silver. But absolutely. I would imagine, though, if you look at this and say, okay, let's just say Tesla as an example, right? Huge silver consumer, or Apple. If they need silver and they can't get it, you're right, they're going to kind of pay more. But I'd imagine that just drives the price of silver up, because it's always it's still supply and demand. But for an Apple, let's just say that on a $1,000 Apple iPhone, there may only be $6 worth of silver in it. I don't know exactly. Right. But, so if that $6 of silver now costs them $10, it's not that big of a deal. So those companies can afford to come in and say, look, if we have to pay $75 an ounce, $100 an ounce, we'll raise the price of our product by $30, and what I mean, they're going to cover it. But on the other end of the people that are holding it, it's a big deal, right? And so
it makes a huge like refrigerators is the one I was talking about. Has about 2 ounces of silver. They're just going to raise the price of the refrigerator, right? I mean, I looked at the refrigerator recently. I haven't bought one in many years. I was like, holy cow, the price of a refrigerator today. But yeah, they're going to swallow up that $100 of silver pretty easily, right? I mean, they're just going to increase the price as necessary, because they have to. And like we've always talked about, that silver in most refrigerators is never going to get recycled. So, the recycling of silver is still small, 5-6% comes back. So that is something that helps the price long term. That the fact that it's just not something that always gets recycled.
And so, because you're interacting between you and your team, you're talking to the very small fraction of the American population that does understand the importance of precious metals, and which again, and I'd say that it's a large portion of my show, because I've spent so many years talking about this, and I look at the comments, I can see it makes me proud. I see someone comment, it's like, oh yeah, I've been stacking since 2016, or oh, I started buying, and 3 years ago when silver was at $25 an ounce. I'm like, it's almost like I'm watching like my child ride the bike for the first time. It's like, yes, okay, right. It's so obviously that but I'm not reaching 10 million people every show, right? I'm not headlining on like a Sean Hannity type thing, and of course he's not talking about these things. But the people that are talking to you, right now silver's hovering $54, $53 an ounce. I mean, it's an all-time high. I think it's actually very low compared to where it should be. If you look at the price of silver, adjusted according to inflation, that's a whole different story. However, for a lot of people, they're thinking, oh, well, it's at a record high. Why would I ever buy anything at a record high? Right? It's kind of like, I would, I'm not going to buy it at the record high. But for me, I feel like it's still such a bargain. Even at $100 an ounce, I think silver is a bargain compared to where I think it should be and where I personally believe it will go. But, I know that you've seen a lot of activity, and not just you, but a lot of the reports I'm seeing is that, as you can see, people lining up outside of the bullion dealers. Even in America, the people that are buying, they know they're buying. So you're seeing an increase in activity. What would you say that the sentiment is for people that are coming in right now when silver's at record high and still making big purchases?
I mean, a lot of our gold buyers have been selling their gold and moving into silver, actually, which we don't like tell anyone to do anything. They just come to us and they're like, okay, gold, I still feel good about silver. And so they've done a lot of those swaps, which has been pretty interesting to see that. a pretty significant amount. So they obviously like feel that gold, maybe they're overexposed in gold or they want some silver exposure. Yeah, I don't think people feel pretty good about their silver purchase. I think as a historian of someone that's been doing this since 2008, I remember when it ran to 50 in 2011, and then they stopped quantitative easing, and they kind of like things got relatively better in the economy, and so it pulled back pretty dramatically. I don't see that things are going to get better that quickly, unfortunately, right now, and so I don't think we're in that same market dynamic for the last time we had a massive run up. Do I think that there will be corrections? Sure, there's always going to be corrections. But the reports that I'm seeing and what I'm seeing, like from the wholesalers and from buyers and other companies, they feel that like 60 is the next number that it's going to hit. In my book, Silver's the New Oil, I had 58 as my number for next year. It went there faster than I thought it was, but the demand for buying is still high. I think the telling point will be if it pulls back to like 49, what happens? Is it like at 49, is it a buying opportunity, or are people still selling? That will be the true sign of where silver is going to be. If at 49, at 48 it hits and people are just like, this is the time to buy, then we're running to 60, and that's what any price point needs to do. I mean, it happened with gold, at 3,000, it was like testing but it didn't test long at 3,000, then kind of pushed above 4. Those kind of big psychological price points are really where you'll see the market sort of stabilize or pull back. And so that until we hit that number, like a 49, 48, I think at this point, if it stays in the 52, 53 range and it just moves sideways, that means people are just still holding and buying. Then they're psychologically saying that this is the new price, right? So that will be the telling point. But I wouldn't be surprised if we saw a 48 or 50, but the most recent thing that I'm seeing is like most of the buyers are they want it now. They're afraid of the stock market. I think that the bigger thing is they're more afraid of the stock market than they are of gold and silver pulling back at this point.
That makes sense. That makes really good sense. And so as we're rounding out, you have silver in stock, you have gold in stock. If someone is interested in buying, what's the process look like? And also, you mentioned before people that have their gold and silver sitting in, say a 401k, IRA, et cetera. And that's what I like about your guys' company is that I believe that from my own research that you're the best in the industry when it comes, especially to managing the process of doing IRAs and 401ks and those kinds of transfers. But just walk us through that process, because I think that what I'm seeing is that people are seeing it for what it should be right now, and they're looking even at say $55 silver and saying it's still a bargain, and that's my own personal belief. So yeah, walk us through what it looks like if someone wants to work with you.
First thing you do is you need to talk to somebody, because I think we need to get aligned and get connected to somebody. We focus on the human connection, so you'll get a representative who has a team behind them that helps with the paperwork. And when I say the paperwork, I mean, everything's electronic. We can do stuff, DocuSign paperwork in 5 minutes today. You can do an IRA typically takes about 2 to 3 weeks right now. It's nothing on our side. We wish we could do it faster, but a lot of times we're, working with the other person's custodian to get the money out. And some custodians are understand that it's not their money, and some think it's their money. So you're fighting with them a bit. But we have a team that does all that. I think the buying and is 5 to 8 minutes. Sometimes we do have to help with the custodian and get involved, and we call them and we do all that stuff. But I think the most important thing for us is like the connection with the person that you're going to call, learning about why you're interested, the ins and outs, the pricing. We want to spend time with you there. So that could be longer, 30 minutes or 45 minutes, but really that's up to you of sort of how long you want that call to be. But from start to finish, I mean, if you're just looking to do a direct cash purchase, I mean, you could have you could be locked up in a price tomorrow, and then you get the metals in 7 days. In an IRA, it's like 2 to 3 weeks. But even after that, you're going to call us, you're going to get emails. We're going to follow up with you. We're going to send you newsletters. So even after the purchase, we're still around. You can always call. That's the thing that separates us, as you mentioned, with the IRA. The reason that people like us and our reputation is good. A lot of companies will just do it, set up the IRA, and then you never hear from them. They won't take your call. We will still, you can call us. You have questions. You're going to get newsletters. You're going to learn. So we don't stop when the purchase happens. We want to be there for the life of you owning gold and silver. And I think that gives people a lot of peace of mind. And so that's something that we really focus on at Noble Gold. And we've always built it that way. So even if you bought from us 5 years ago, you can call us, you got a question, and people are going to spend time with you. And these relationships are important for us, the human relationship. It's not all bots. It's not all, moving quickly. It's like sometimes we just have to take time with people and get to know them. And, that's something we really focus on.
Well, it's all, which is good to hear, because it's a big decision, for a lot of people that they're looking at their retirement and their nest egg, and they're trying to be so strategic with it. So that's great. Well, I know we've got a website set up to make it easy. It's just goldwithseth.com. That link is also always in the show description. Direct phone number is also 877-646-5347. And if you go to the website and fill out this little form there, you'll get a wealth protection kit, which also makes it easier than set things up. And I think education's key. Like that's a good point. It's like, I know you'll take as long as it needs to explain to someone, here's how ETFs work. Here's why owning physical is different than owning this equivalent in the SLV ETF. So, so Colin, it's been great having you on. I know that you guys have been very, very busy, which makes me happy to see that you're doing well. And yeah, we'll do an update in a couple of weeks. And I mean, maybe 60, maybe silver will be at 60, maybe it'll be at 48. I mean, I don't know, but it seems like the mechanisms that have kept it low for so long are just starting to fall apart. So the sky's the limit. We'll see.
Yeah, no, it's amazing. And we're here to answer questions, basically. So call us. Make sure you mention Seth, Man in America, the show. So if you use the phone number or whatever, make sure you call and mention the show. But yeah, thank you to everybody. Looking forward to talking to people on the phone, real people, Americans.
Yeah.
We love talking to Americans. So if there's anything we can do, feel free to call us at Noble Gold. And I think you'll enjoy the experience that you have.
Perfect. Thank you, Colin.